Wicked late day rally yesterday, and I thought I missed it. You missed it. But you know what? You got an opportunity to buy the dip overnight, and even now we're down nine handles. We'll talk about the catalyst or non catalyst for that. Couple earnings reports, nothing major. We do have stocks going nuclear again. Craig Johnson, 835, managing director over there at Piper Sandler. He'll give us his take on the markets. Here's a Tuesday, not a slow Tuesday at all. Let's get it started on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's go right to the big board. We're down 7.25 handles. We're 30 handles off that low at 09.25. We'll talk about the catalyst for that overnight dip. Buck on the rebound here, hanging out near the low of the move, but up 42 cents at 99. TLT just trying to get away from that $84 level, up 20 cents at 85.36. Crude flat 69.71. The USO holding, or 69.29, holding on to yesterday's gains. GLD in the red at down 226, 309.41. SLV up down 41 cents at 31.18. And Bitcoin hanging out the 106K level, up $810. Let's bring in Triple D. Triple D normally gets to take Tuesday off, but Christian's doing some traveling, and so pinch hitter.
They're
Triple
stuck with
D,
me today.
I'm
You're
stuck with you
me.
again.
I know.
But Dennis, I want to know how many trades you executed when the news came out that the OECD was cutting the global growth rate forecast.
I don't know what the hell that means. What does the OECD stand for? Is it OCED? What does it stand for? I don't even get the acronym right. What does it stand for? Do you know? Do we know? Brent,
the Organization for Economic Cooperation and Development. Organization
they're
for
trying
Economic
to tell us the
Cooperation
market is down because of this?
Yes.
Is that what they're saying?
That's what Joel thinks.
Joel thinks this, or Joel, what is your thoughts on this, Joel? OECD?
All right, okay. Let's do a little.
I know what OCD is.
Okay. It's on Google, Dennis.
Well, it's got to be right then. Okay. So the U.S. growth outlook was cut by the OECD.
OECD.
It must be news. If it's on Google.
That's scary. I'm so scared. Anyway.
I'm sensing a suggestion of sarcasm here, Joel. You do not think this is news.
And Brent, you know this as well. The major media always wants a reason for the market moves. They don't want to hear technical reasons. They don't want to hear overbought. They don't want to hear that we're just chopping around. I mean, we're down 10 points. Well, no, find something. Find something good. Okay, the OECD cut global growth rates, and that's why we're down.
Yeah, that'll do. Get it up there.
Spread that around. That's got to be it. Let's do that. Honestly, like, I don't know. I don't even know this company or this organization. Nothing against you, OECD, but I think everybody's talking that this is the main reason that we're down significantly. Maybe, it could have an impact, but there's a million other things to think about here too. So sometimes you just don't need a reason. That's our bottom line. Sometimes things just
the reason that we're talking about this so tongue in cheek is because, to me, the market started selling off at 6 p.m. last night. We had a very strong close, actually, when we were with the STN room, and we went to 55.50. I thought the high, at least for the up to the 5 o'clock and perhaps for the overnight session, was in, but we had that extra juice after hours. You said they pumped it, but when the bots reprogrammed at 6 o'clock, the close was 47.25. They couldn't hold the close. They started drifting lower. So we just wanted to highlight that and move on. With 30 handles off the low, they bought the dip.
Yeah, Lacasse. I'm calling you Lacasse because the Lacasse door it makes me trouble to say. So Lacasse says they were very well known in France. Okay, Europe's down, so maybe this is the reason that Europe is down. We were already down to your point here, Joel. So we'll give the OECD to France. We'll give that to Europe. Say that's the reason Europe is down. But U.S. markets were already down. I don't think the U.S. markets care that much. We were down early last night. We ramped into the close. We talked about this on STN that we're likely, I thought we were dip. We actually continued to rally after the close, but eventually we did get that dip at 6 p.m. when the futures reopened. Then we dipped down, and then obviously European markets fell after that. So I'm not sure what time the OECD came out with this global cut in forecast, but I'm pretty sure we were down well before that because I traded Europe last night and it wasn't down at all. When I left at 8 o'clock, Europe wasn't down at all. So we were already down. So maybe this is the reason for weakness in Europe. It's not the weakness over here. We're not even that weak. We're down 9 handles. This is just chopping around. So I still think the buy the dip mentality is unbelievable out here. We have a whole industry to talk about here that has real news. And that news is nuclear. This market is now nuked up. Holy mackerel, CEG exploding to the upside. Constellation Energy, and I will give you that news here right now. Constellation Energy and Meta sign a 20-year deal for clean, reliable nuclear energy in Illinois. It goes up 12% on a deal with Meta. What if they sign a deal with another company and then another company and then another company? Going to go up 12% each time? It's a huge move, man. Feels way overdone, but we know the way this stuff goes. What I will say is the all-time high on CEG is 352. We coincidentally, maybe not, are trading at 352 on the button right now. So we are at the old all-time high for CEG.
Yes, we are. You took my number.
Also consider that we were 161 7 weeks ago. So the stock has doubled. So if you are buying it now, if you are coming in and saying, I absolutely need to be in CEG, absolutely need to be in it right now, it feels like you're doing it backward. It does. I know nuclear has been going and going, and maybe it continues to go. I think there's a long-term story here. I agree with the long-term story. I agree with AI. I agree with all of this. But buying dips is how I do it. Up 12%. Feels like almost like a upside capitulation after we've had an extreme move. The stock has more than doubled in the last 7 weeks. That's a big move, folks.
You gave the number of the day, the number of the week, the all-time high. That was at 352. So if that was your target and you want to sell it there's a pretty good opportunity. If you're looking for more, the pre-market high is 363. So if we get through that 352, we hold that, not get through it, hold the bid. Show me a bid for a half hour into the market at 352, then okay. Then we're going, then we'll go to 363. But man, kind of feels a little bit overdone. But this is igniting other stocks.
Oh, the whole entire so igniting itself, but then the entire nuclear sector is going here. So and I'll give you the whole list. VST, Vistra, obviously all these stocks come significantly off the lows here. We can go into the little ones like NNE, which had the offering but it's starting to show life. Oklo, which has had the sell-off the last couple of days, but starting to show life here again and now blasting off on this. SMR, Money Mitch has been talking this one here too. It's up another 6% here this morning. Then go CCJ, Canadian. I mean, these things have run so far though, Joel. This is like my struggle, like why I'm struggling to, put some of that cash to work now in my long-term account. I'm like, we put some to work before. I'm like, I don't know. I just can't get on board with chasing all these things now. Like CCJ, for instance, was $35. It's now $60. I mean, these are enormous moves these stocks have had. Enormous moves. If you go back and look at the long-term chart of CCJ, There are not a lot of times on that chart where the stock has went up 70% in a 7-week period. I don't know if it's ever happened. Yeah, well, actually it did. It did in July of last year. It did the exact same move, and then it gave it all back. So we have precedence here. I'm not chasing any of these moves. The momentum, it's you can trade anything. So I'm not talking with the trading hat. Meaning trading hat off, investing hat on. This is not the time to invest in these stocks. Boom, boom. Investing hat on, trading hat back on. You can trade anything. Momentum, setting up, buying dips on strong stocks, Christian Fromhertz stocks. These are all great stocks to trade from the short term, but don't get caught because the rug will get pulled eventually. And when it gets pulled, it gets ugly, a la SBEV. No, what was that symbol? Not SBET. SBET, Sharp Link Gaming. We talked about this one on the show 2 days ago. It was $100. I was like, I don't know where it's going. It could keep going, but eventually it's going to be a rug pull. 100 to 120 and bang to 50. Now, the energy stocks aren't going to do this, but there could be a 10% down move in the blink of an eye, a 20% down move really quick too. They've come so far. So typically when stocks go parabolic, and these are mostly parabolic moves at this point in time, there's usually a check back. There's usually a rug pull. There's usually a shakeout. That's maybe where you strike on some stuff like this as opposed to coming in. Now, not SBBET. I'm not buying Sharp Link Gaming whatsoever, but saying, I'm just comparing and showing you rug pulls do indeed happen. They happen on small stuff. They happen on big stuff. Oh, I'm in Constellation Energy. That's a lot. That's got a good fundamentals. And if it was rug pulled, I'd be okay. Yeah, but if you could buy it $10 cheaper, why chase it? $20 cheaper, why chase it? I mean, this is a capitulatory move. It's kissing the old all-time high. I just think it's a ring the register moment. That's where I'm at on CEG. Could be wrong.
And aren't these long-term projects? Long-term? I mean,
and again, to valuation on a lot of these names, like CEG makes money, but some of these other ones, are in cash burn situations. Like they don't even make money here yet. So I mean, there's stories that they don't even have close to making money. Like CEG at least has got a decent valuation, 32 times earnings. Like that's still expensive for an energy stock though. Historically, energy stocks trade in the teens, but we got this nuclear buzz going on, so these things have exploded. But if you look at like an Oklo, I mean, there's no valuation support here whatsoever. This is all story. It's a $7 billion market cap. They don't even have sales. Like I don't even think the company has sales. Like these are stories. Does Oklo have sales? Am I wrong?
Let's
go look.
No, I
Maybe
think we looked at this
Let's look
one
at the last
before.
earnings report.
Yeah.
I don't even think they have sales. So these are stories, and these things are going to maybe be big. But at this point in time, they are stories. So you got to keep that in mind,
No, they never.
Little bit.
No.
When the story
last
gets
quarter,
hot, fundamentals don't matter at all.
Wait, I'm not even
I don't think they
seeing
have sales.
any revenue.
That's what I'm saying. They don't have sales, Joel. There's still concepts here. Some of this stuff can work out, and then maybe they're going to explode. The sales are going to come out. They're going to be billions of dollars. We're all going to make rich. It's going to go $1 million a share, like Bitcoin. But I'm just trying to cool our engines a little bit. The stocks have come a long ways. The easy money has been made here. If you're buying, the Oklos and all those, and they might continue, but you're coming in and buying these stocks today, you're buying somebody else's profits. I like to buy dips, so where I've got panic. Think about the Warren Buffett approach. When there's greed, be fearful. When there's fearfulness, be greedy. That stuff works. There's a reason the guy's one of the richest people in the world. He buys the dip, not the rip.
You know why
that's basically the Warren Buffett way. Buy the dip. That's the Warren.
You know why
Buffett way.
I'm gonna
the best strategy ever.
You know why I may invest in every one of these stocks today?
Why?
Because you never know.
I hope you're being sarcastic.
They're going to do an offering to buy Bitcoin.
I know.
And that could be the next catalyst.
That's the best strategy out there right now. I told you we should just shut down the STN, shut down pre-market prep, and we're going to go public with a company. If I could get that DDD, 3D systems, and that ever goes under, I get their ticker symbol. I'm going to launch a company. I'm going to just buy Bitcoin with the company. And the stock's going to explode. It's going to make millions and millions and billions of dollars because we're going to buy Bitcoin. That is just insane. Like the strategies, and there's multiple companies taking it right now. It's the new thing. We're going to buy Bitcoin. I could say, I'm going to buy Bitcoin. I own some Bitcoin, but my investment account isn't exploding higher because I buy Bitcoin, but just the concept of buying Bitcoin explodes stocks higher right now. We just might be in a little bit of speculative bubble on some stocks. It's possible. Possible.
Okay. All right, we got to move on from these rants here. We're going to move to the biotech sector, and still, I mean, the rally held in those, so that's a good thing. But we have some individual stock news to cover, and lo and behold, after hours yesterday, we get some breaking news on MLTX. Is that what it is? Brent keeps telling me it's MLTX, and the breaking news on that. Moon Lake and Minuther trading higher. Further reports Merck is held talks to buy the company in a deal valued at over $3 billion.
So rumors come from all over the place, and Brentster is very good at this, because he covered the Benzinga news desk for a long time. There's rumors from here, rumors from there. Some are very good sources. Some are like, they come true every once in a while. Like you get a rumor from Wall Street Journal, it comes true like quite a bit, like not 100%, not 50%, but like 30%. When these things are batting like 30%, they're doing really well on these rumors. Financial Times is solid too. So this one comes from the Financial Times. They have a track record of getting some right. But just keep in mind that the best ones, and I don't know, Brent, if you have those stats, you showed it to us once in the STN room, but the best ones, these rumors come, to fruition like 1 out of 3 times. The worst ones, they never come to fruition. Do you know those numbers? Did you I thought you showed us some.
It was a few. It was a few years ago, like in maybe like 2021. I did some research. I think Dow Jones was the highest as far as rumors. They were like close to 30%. Bloomberg was around 20%. Reuters was around 25%. But like you said, Dennis, there are some sources that post rumors, publish rumors like they're a publication, and it literally never comes true. Not the case here for this source. This is Financial Times. Financial Times is good. They have like around a 25% accuracy or so. So this was a decent report. It looks like. I just want to mention on this report, know your sources, know your language. 2 huge things with rumors. And the language here said that they held talks, past tense. Merck and Moon Lake held talks. It could be that they held talks and they said, this isn't going to work, guys. Sorry. And this is over.
Yeah.
So that we've seen that happen a number of times before. So yes, you can get excited about the rumor here, but I don't know. You have to just taper your expectations a little bit. Again, know your source, know your language. I think that's important for these rumors.
And the timing of this rumor is impeccable because we got Diosco going on, where you've just seen, a buyout, you've seen, rumors, you've seen deals. So it's like right now, that is a perfectly timed rumor, like perfectly timed. But I love what you said, held talks in the past tense, knowing this kind of stuff, because you know what that likely, to me, that means held talks, but they didn't go anywhere because the stock's still not taken over. Holding talks, well, that sounds a lot more.
That's a whole different story.
Well, that sounds like, hey, this might come to fruition. So we get a stock that pops literally last night 25% because they held the talks in the past tense. Now we're $6 off the highs, and people are like, well, where's the deal? Where's the deal? Held talks, holding talks, big difference. Who teaches you this stuff out there? CNBC teach you this? Who teaches you this
it could have
stuff?
just been like the secretary from Merck calling over, hey, could you get someone on the line over at MLTX?
Well, that's
I want to talk
possible
to
too. We don't know. That's a great point. We don't know what held talks exactly means. So did they pick up the phone and said, hey, would you be interested in buying us? No, thank you. Held talks. We're not saying that happened. We don't know. We don't have the color. But held is a hell of a lot, worse than holding. Holding sounds a lot better than held.
Or continuing negotiations, Well,
that sounds great too.
Yeah, no, I'm just saying.
There's a lot of things better than held talks. So stocks popping 25% on held talks is often a ring the register opportunity. Write that down. Held versus holding. Write it down. Go get your sticky note right now. Go get it. Write it down. Held versus holding. We're teaching you important things here. It's a teaching show. You know, we can do charts and we can do technicals, we can do all this, but this stuff's important, man. The stocks move 25% up on this. You see next time, you know, you start seeing, and again, just because you see something held talks doesn't mean short it right away. Shoot them in the back. Pick them when they're down. What's that mean? Let it go top out. Let it go. Then you start seeing it leak. It's like, oh, now maybe I can short it. So you're not probably shorting this at 54, not getting the highs. But once it starts, made that high, pull back 51, then 52 is topping last night, 52. Trying to get through 52. Can't do it. 1, 2, 3, 4 times can't do the 52. Maybe we should try a short of 52. And then you can leak it down. Or maybe even just selling your stock if you're long. That might be a better opportunity as opposed to shorting a rumor, because the rumor comes to fruition, gets taken over $100 and you hate Dennis. So probably more of a selling opportunity of being out of a stock, like saying, I just got 25% windfall on held talks. I'm going to ring the register and take my 52, 53, 54. So that might be the better opportunity. But professionals out there is opportunities to short these things too on these spikes.
Okay, let's stick with the healthcare or the biotech, or what do you put HIMS in? Is HIMS and hers? Is that a what
drugs.
Is it?
Yeah, sure.
Drugs.
What they
Drugs.
sell.
Let's go. Let's go. HIMS and hers announces strategic acquisition of European digital health leader Zava, like Slava, to drive major growth in key markets. Now, I know we have a lot of Europeans here in this chat. How many of you have heard of Zava?
It's a great question, Joel. Great question.
No.
Come on.
No, I don't know.
We're waiting. So I'm looking at this press release. I'm looking at this press release here, and something that is important with any kind of M&A deal, any kind of contract deal too, is you want to see some terms disclosed in the official statement from the company. I'm looking at this HIMS and hers press releases. I'm scrolling through. There isn't like a dollar value here. They're saying what the deal is going to be made up of. It's going to be made up of cash. Excuse me. But there's no like, they bought this for $100 million or something like that. When you see that, it means that the company has determined that this value is not material to their business operations. So if you don't see terms, it means that the company doesn't seem like they have to mention it. They would have to. The SEC requires that they would have to if they think that it's going to be material. So, you know, yes, we have HIMS and hers moving here, but it's on a deal that we don't really know the value for. I'm not sure that we know the company too well. I think your point here is that HIMS and hers, and this isn't going to be jaw-dropping by any means, but HIMS and hers just moves on any news item. This is a pure momentum name. And when you see these things happening in the market, it can strengthen your thesis about how these things trade.
It's retail driven, darling. So any type of headline, the algos are all over it. So quick lesson here too. Looks like it's going to be Teaching Tuesday. But retail is a driver of price for sure, because the retail is anticipated by the algos. Algos love front-running retail. Algos love a good, sexy story because we're going to buy this and all those retail traders are going to follow us. So keep that in mind that, you know, HIMS is a retail darling. So it's a stock that the algos will rip up on any headline because they know retail's coming behind them and they're going to make some money. So if that headline breaks, they're buying 57, 58, 59 instantaneously. You can see it last night, the chart, or this morning, I guess that was, because they know retail's coming. There'll be a few retail quick traders trying to get in there too, and there's some awesome retail traders. I feel like I'm retail now. You know, I'm with Interactive Brokers. But they know that these storied stocks are followed very closely by retail. So the algos are like programmed to front run retail. That's why these things rip up on any headline. Now, Is there follow through? Sometimes it's more follow through. Sometimes retail, comes in and they continue to drive the price. But sometimes there's also not follow through, where a stock will leak back down. HIMS, I don't know. This is such a retail darling. Actually, the technicals aren't bad on this thing. You have all those lows, Joel, 51, 52. It's put in some work here after the big run from May. So technically, it looks like it could go higher. I don't like buying rips, though. Same thing. I get paid to buy dips, not paid to buy rips.
It's hard to me to give this 63.20 number because that, of course, it could go another $2. So if you're holding out for that, congratulations. The reason is that it had a big fall that day. It fell $4.21 from 61.21 to 58. So caught a lot of people that were like, "Oh, I'm holding on. This is going to all-time high here." So the close on that day was 61.21. There's some confluence with the pre-market high at 60.94. So 61 is my level here. Take a look at it. If you regret not selling when it was back up here, consolidating, and looked like it was going to 70, here is your opportunity with HIMS. Still a creeper rally going on here.
It is.
Yeah. Yep. So
they cannot keep this market down. It's rallying on bad news. It's probably going to rally on OECD, worrying that the market might be a little bit overbought. Growth forecasts a little bit cut. That's probably not the headline that this market's going to crash on. I mean, we're rallying in the face of like deal talks falling apart with China, last week. We are rallying on everything. So this market is in full bull mode here still. So if you think that the OECD is going to top this market out, I don't think it is. It could be another headline coming, but eventually it's going to get topped on some tariff thing or something. And we are overbought. There's no doubt about it. But I'm still in the camp that we make new all-time highs in June. I'm sticking with that.
Okay, I'm just looking at that same page, with the headlines here, and now they finally got rid of market lower, sharply lower on that. Now they got like
sharply lower. We're down 5 points. Holy clickbait! Right there, 101. Okay. Let's go to earnings here. We can do Credo from last night. We got Credo. We got Dollar General. Let's do Credo Technology, stock that I've never traded, I don't think. Maybe I should start trading and adding it to my watch list because this one moves. So CRDO, I will grab you the earnings here because it's right in front of me. CRDO reports 35 cents versus 28 cents, 170 million versus 162 million. Yes, that's million sales. They raised guidance. 185 to 195 million versus 167 million. Details on Credo, because when you see millions of dollars in sales, I'm assuming it's not trading for millions of dollars in market cap. Of course not. It's trading $10 billion market cap. P is 216. Price to sales is 26. So not a lot of valuation support here, but it doesn't matter in a bull market. Say it again. Valuation doesn't matter in a bull market. We're in a full bull market. The CNBC will tell you that. Once we make new all-time highs, they'll say, we're the start of the new bull market. Now, the start of the new bull market was 7 weeks ago. Probably be the end of the bull market when CNBC says it's the start of the new bull market. 71.50. We're having a nice pop here. The bull continues. There's no sign really of a sell-off here. It's getting back to its highs. Joel, give me some technicals on CRDO.
Easy, super easy technicals. Technical analysis 101. Pre-market high 73.98. This little high right here where my cursor is 73.78. So, it's resistance. If you want it, if that's your target, gets up there, I think it's a good target, a good area. I wouldn't be surprised if someone locked this down at 72 off the open and just said, okay, this is great. I don't care about 72.5 or 73. So I'd say nice round number like that, straight at 400K. But that's it. That's it for Credo Technologies. Definitely a stock I'm not familiar with.
I would also not be surprised if the thing just continues to 80. So I'm not trading it. This is one of those curve balls, and you don't know which way it's going. Coin flip territory for me at 72 because we're in a bull market and stuff can continue when they have good earnings, and the earnings were fine. the market isn't gonna all of a sudden discover today that the thing's trading 30 times sales. So that's probably not happening. So bull continues and bull runs, valuation doesn't matter at all. Dollar General. DG, valuation does matter on Dollar General. This is a stock that was absolutely in the gutter at the beginning of the year, the 2025, where we talked about this too. Leaders become laggards, laggards become leaders. That trade has continued for Dollar General all year. That January effect, yes, my January effect is leaders to laggards, laggards to leaders. Others will say, oh, small caps start to go better than January effect. I don't follow that January effect. I follow the January effect where you have industry, you have the leaders of the market from 2024 often lag in the first few weeks of 2025. Dollar General is a laggard to leader trade. That has completely continued. DG reports good earnings here. Once again, it probably just got down to a valuation, which just didn't make any sense at all. $1.78 versus $1.58, 10.4 billion versus 10.64 billion. So they miss on sales, but they beat on the bottom line. They actually raise their guidance here too, Joel. They're bumping it up just slightly, and I mean absolutely slightly. They were 510 to 580. They bumped up the lower end 520 to 580. So that's the slightest guidance raise you could ever possibly get, but they want to put in the headline guidance raise. So they did do it. Technically, they did it. The PE on this puppy is still like 17 times. It ain't cheap now. It was cheap when it was like 12 times back at 60, but now it's run. So I'm probably not chasing Dollar General either. You know me, I'm never buying the rep.
I'm trying to figure out when there was. I know these stocks are in the gutter, and I don't know. I thought it was Dollar Tree. I'm looking through my ratings, and someone came out, and it was like right near the low, and it gapped up. I don't know if it was Dollar Tree or whatever, but it got a vote of confidence. It's so far back I can't find it. But nice move here for DG. I mean, traded up big, 833, above the high of the move. So we'll just focus on the recent high of the move, well above that, 102.69. I mean, this thing's, built a long base. What do they say? The longer, bigger the base, more the space. So next monthly high doesn't come in at 125.42. But as always, we say pay attention to the pre-market high, 108.48. You get through that, maybe some paper at 110. But as always on these big moves, no matter what the catalyst is, you got to get through the pre-market high if you want it to go higher, and you got to punch it through the pre-market low if you want it to go lower.
Dollar Tree is trading up in sympathy here. It trades with the exact same valuation of 17 times, even though these stores are quite different. Like you go into a Family Dollar and you go into a Dollar Tree. They're different. They're different stores. They're different. Dollar Tree's in big markets. It feels like Family Dollars are in little towns. They're a little bit different. But Dollar Tree trading up $3 here. It's come back a long ways from the lows too. $60, $100 on Dollar Tree, I think would be major resistance. It's not that far away from there. You ever go in those Dollar Tree stores though?
You know what? I got two stories. The second one's a
We
little
have
bit
1 minute
longer.
to tell two stories.
No. I'm saving the other one because the other one is very complex.
Okay, go.
I went to Five Below over the weekend.
Have they changed it to 10 below yet?
Do you know how much I spent at Five Below?
$5
plus tax. Yep.
Oh.
Yep.
Is everything still $5 in there?
I mean, I just focused on my one thing, but I will say I called the store ahead of time. I wanted some stretch bands, to be able to stretch out. And I went to like the sporting stores. They're like, wait, they wanted me to buy like a pack of 10. I'm like, I don't need a pack of 10. So I called Five Below.
What?
Well, yeah, I called Five
band.
Below and I said, do you have these? And they go, yes, they come in 3-packs. And I'm like, so I went over there. Of course, couldn't find it with all the candies and all the tchotchkes they have in there and everything. And I asked the lady where it is. She couldn't find it. She called someone. They found it. They took me right to it. Paid $5. Checked out. Five Below. I'm upgrading it from a
That's
stock
a
that
good customer experience right there.
It
we
is.
like good customer experiences, and we're bringing Craig Johnson in on the fly because he's liking this conversation here too. Craig, are you a Five Below shopper? Oh no, He's muted. Check your mic. He's muted. I don't know why. It doesn't say mute on our side, so it's probably a setting on your computer. It's probably in your mic setting and an internal mic. You got to turn it down to 0 or it's muted.
How about now?
Yeah, we got you.
All right.
So I'm going to ask the question again. Are you a Five Below shop? Do you go in those $5 dollar stores and just scoop up all these rubber bands for $5?
No. I've never been to a Five Below. I've never been to a Dollar General or a Dollar Tree store. And again, I don't say that from an egotistical standpoint. It's just we don't really have them around here.
Where are you? I forget where you are.
I'm in Minneapolis, out in the western suburbs, and we don't really have a lot of those stores. So unfortunately,
expansion possibilities.
Yeah.
Hey, Dollar Tree expansion. We need Minneapolis dollar stores.
Yeah, if I want to get some of these kind of things, what I end up doing is I just go to Amazon. And again,
I wonder if Amazon. So my question about this whole sector, and I was going to go into it with Joel, but I might as well go into it with you, Craig. Is this this has got to be scary for these companies with tariffs, right? Because a lot of this stuff comes from China. So Are they not going to be this? Kind of feels like nobody's thinking of these stocks, but this does not kind of feel like these companies could be the ones that actually get impacted the most from tariffs. Some of them,
yeah, a lot of these definitely could be very impacted from tariffs. But I think part of the thing too is, Dennis, is if you think about this, these stocks have already sold off pretty hard. And I think a lot of it is a recognition that they are going to be paying some higher tariffs in here. And then all of a sudden, the administration backs off of these tariffs, and you had a lot of the negativity already priced into it. I mean, people were baking in the worst case scenarios. So I think what you're getting with your Five Belows, your Dollar Trees, and these is sort of a relief rally is what we're getting, because it's proving not to be as bad as what people had previously thought and were baking into it.
I think I agree with that. It's funny, though, they've actually overshot maybe to a certain extent. Now, I look at a Five Below, and this comeback in Five Below has been absolutely incredible. So it went from 80 to 50 on the tariff announcements. Well, now it's 117. I mean, so we're actually up 50% more than when tariffs didn't exist at all. I'm at a certain point in time, this stock has been an incredible run. The chat's talking about $50 to 117 in 7 weeks. This isn't like some AI technology company. This is a $5 dollar store that has went up 140% in 7 weeks. Now, it is significantly off its all-time highs, but holy cow, that's a pretty good run here, Craig. I wish I would have been buying the $5 dollar store on the tariff announcement.
It's all about expectations and those pieces to go with it. But now at the 120-ish level, you're getting back to the old highs. If you go back to December of 2024, you're back to those old highs. And the question is, you got enough momentum to ultimately break through from here? I would imagine the stock is already pretty well overbought. So I would say that people probably fade it closer to this 120 level than not. For the Five Below, to be specific.
I think I'm with you. I think a lot of the easy money has been made here on all of these stores, all these $5 dollar stores, because I think, and then we're going to bring it into the tariff conversation here, because obviously, we had the tariff tantrum in April, stocks got murdered, and then we kicked the can down to July, which July is still coming. But, it looks like it's going to be a hell of a lot less than maybe that big, board that he had on the board. And he was talking about 48% here and 90% here and all this. So, the market's kind of accepted the fact that we think tariffs are going to be a lot less. What is your thoughts on tariffs and the second half?
Yeah. Hey, Joel, can you bring up the chart of Five Below?
Sure can.
Oh yeah, sure.
Okay.
Because I think it's important to point out. Can you put any sort of momentum indicators on any of those charts?
What?
Guess yesterday
what would
I asked
you like?
that. He's getting faster at that.
What would you like? What is the preferred?
Put up just a 14-period RSI or a slow stochastics. One of those two are ones that I would use.
Okay, a relative strength here.
Nope, RSI.
I got relative strength, and then just RSI, and then RSI JP. I don't know what
just
that is.
do RSI.
Look at this. Holy mackerel. All right.
Okay, blow that chart up so we can see it.
Yep. My point is that when you look
Bigger.
at this, you're already in overbought territory. And while the stock is going up, note the divergence, right? So from a pure trading perspective, if you've got price going up and you get your relative strength going the opposite direction, you got to pay attention. That's like sort of pushing a rock up a hill, and you're sort of losing your ability to keep pushing it up the hill. So at this 120 level, you've got sort of a negative divergence happening, which is something you want to be careful from a trading perspective, because this thing could roll back over on you, be down 20% back to the gap up price that you had seen just a few weeks ago. All right.
I don't like getting run over by rocks.
No.
So I'm going to probably not chase this one here, which brings me to, everything in the entire market, because let's just leave the stochastics up there, leave the relative strength up there.
Okay.
Bring that chart bigger. I hate the 3-chart system because I
Dennis,
don't know what
if
the
you
hell's
say
going
that
on.
one more time.
I have been
I'm
against
only
the
going to
3-chart
one chart
system
tomorrow.
for
Dennis.
5 years, and I got
Oh.
voted off the island by the pre-market prep chat. They all like the 3-chart system, but I don't know. I want one chart because I'm a simple guy, and I don't mind having the relative strength up there, but bring up the S&P on the same, chart, SPY, because we have went up. Bring up the SPY. Bring up the SPY on the same chart and blow it up big so we can see it.
Yes, Dennis.
It kind of looks the same. Like we're kind of an overbought a little bit territory here on the SPY too. Are we not, Craig?
No question that we are a little bit overbought on a daily SPY. What I've been saying to people is that, we're a little overbought, but we've had a very significant series of bullish gaps that have taken place when you look at that chart. Can you kind of make that a little bit shorter of a time frame so you can see the space?
Yeah, 90 days, right, Dennis?
That's the best one.
Yeah. So just sort of shorten it up a little bit in here, and you can see some of these gaps on the chart a little bit. And the point that I would make to you is you've had basically 3 sort of meaningful gaps up that have taken place on the charts. And from that point of view, the point that I would basically say to people is these gaps you've had here and in price, you can see the ones back in the April, the May time frames. We basically kicked the door open, had a gap up above a 20-period moving average, 50 moving average, and 200-day moving average. And everybody's coming back and saying, well, we got to close those gaps. And what I think a lot of people are missing, Dennis, is that a common gap is correct. It would be closed. Typically 70% of common gaps on a price chart are closed within the first month. But there's other types of gaps. Not all price gaps are made equal. You've got runaway gaps, you've got breakaway gaps, and you've got sort of common gaps. The break gaps that we have seen here coming off of these lows have been breakaway gaps, and breakaway gaps on charts are due to a huge shift in sentiment. And that huge shift in sentiment happened around tariffs. And those do not have to be filled. I think that's what a lot of people are missing. So keep watching this market. If it's going to open weaker, watch it crawl up all day long, because a lot of investors on the institutional side have not participated in this move. And therefore, they're hoping for any sort of shorter term pullbacks to buy the dip in this market.
And that's really been the driver of price. And we've talked about this on this show, is that there are money managers who are significantly underinvested here, and they are buying every single dip relentlessly, and we see it. It doesn't even matter what kind of dip it is. We dip on China, over the weekend, or I think it was Thursday or Friday, the talks, are getting a little bit dicey there, and they buy that dip. We have the OECD downgrading growth forecast today, and they're trying to buy the dip here again. It's like, it seems like they're just buying every dip no matter what. What breaks that habit? Like, do they eventually stop buying the dip, or does it just continue to work forever? Which it kind of has.
Well,
the last 100 years, buying the dip has worked pretty well.
Well, I mean, markets go up over time, but in a more suitable time sort of methodology to think about is, I guess when a lot of that money sort of comes out of money market funds or comes off the sidelines, or a lot of these funds start to sort of get a lot of that cash already deployed. So watching levels such as cash and leverage and some of those pieces, Dennis, will tell you when you start to run out of money for the buy the dip crowd out there. But right now, I think there's still a lot of money on the sidelines. And when I hear from clients about gross and net exposure and everything else, they're still pretty well underexposed to this market. And again, negative news out there continue to climb that proverbial wall of worry.
So second half projections here, Craig. What are your thoughts? Are you like continuing? What are your thoughts? Where's your targets?
Well, where I am for a year-end objective is I'm 6,600, and for the S&P, and I think that's going to be an achievable target. I will just note, Dennis, okay, and don't fall out of your chair when I tell you this. I like to use point and figure charts to help set price objectives. If you were to look up a point and figure chart for the S&P 500, which would be looking out somewhere between about 9 to 10 months, that price objective right now is 7,600 on the S&P 500. Okay.
Wow.
So don't get a concussion falling out of the chair. It's bad, okay? Because United Healthcare may not save you, to be fair.
Probably not.
But at the end of the day, the point that I would just make is that I think as soon as we clear some of these May highs, I think you got a real shot for this market to make a run back to the old highs. And that could happen as we get into the Q2 earnings season. And you start to see that, hey, you know what? Tariffs weren't as bad as what people were projecting. And they were sort of perhaps a negotiation tactic, whether people like them or not. But at the end of the day, I think we've got $68 billion have been brought in so far from these tariffs since this new administration has started. That's going to help sort of narrow that budget gap for the coming year, which ultimately probably is positive. And that's why I think we've got a market that will probably continue to keep working, get this budget bill behind us, get some of those things behind us, and equities probably continue to keep working. But Dennis, as long as we're here, let's do this.
Yeah.
Let's run through some of these Mag 7 stocks.
Oh, yeah. Fun.
I think there's an important point to make here. Then I want to throw out a whole bunch of other things that I pulled together for your show here today. Okay.
Okay.
Excellent.
So let's start out with Microsoft, right? And if we were to put this into the buy, hold, sell category, please note we haven't broken out to a new high. And you're starting to see your momentum at the bottom of the chart just kind of going sideways. So until you break out, I think you got to be a little bit more cautious. Call that a neutral, right? Take a look at NVIDIA. Great numbers on the print this past week, but at the end of the day, we still haven't broken out above that 153 level. Then you take a look at Apple.
So you got a neutral there too, really. You
got a neutral there too. Then you take a look at Apple. What do you want to do with Apple in here? Probably a hold at this point in time, more of a neutral again, right?
Yeah.
And then you look at
doesn't look bullish.
Correct. Then you look at a chart of Alphabet.
Kind of neutral.
Right, kind of neutral.
I sense a pattern forming.
This is brilliant. You are brilliant today.
Right now, but also look at that chart setup. Scrunch that up a little bit so it's not as long or a short of a time frame. Make it longer. Okay. Anybody who sat in for their CMT designation would look at this chart and say, "Is this a potential Head and Shoulders top in the making?" You'd have to, right? Because you got your left shoulder over there in the July time frame. You've got your head that's taken place. And now if we rally up maybe toward 190-ish, you've got a pretty symmetrical multi-month kind of Head and Shoulders top.
Stock's got dandruff.
Stock will have problems at that point in time, right? Okay, now let's also take a look at what you have with Amazon.
Okay.
My Five Below substitute.
Well, that kind of looks head and shouldery too.
A little bit, but not quite as bad. But again, sloppy and more sideways. And so the only two out here that I would say among the big guys that look actionable right now one would be Meta. We just sort of on a shorter term basis broke out of sort of a nice little short term consolidation. I think you're on your way back to 740. I called that a buy on our morning call today. And then the other one I would tell you is Tesla. This one looks constructive, downtrend reversal, coming off of those highs of late December 2024. And it looks like to me that we can clear some of this resistance in here and probably take another leg up. So like what I see there, and some of your moving averages are starting to turn higher. Okay. So
we have 5 neutrals and 2 that look pretty good here. How does that get you to 6,600?
So what I think is going to happen is you're going to have these Mag 7 stocks probably end up consolidating. And then below the surface, you're going to have a lot of these other companies that are going to look a lot more constructive. Let me throw a few out to you. What do you want to do with a small company called Broadcom, AVGO? They got earnings coming out. You've been making some new relative strength highs and actually at an inflection point of a breakout, right?
Yeah.
So what if this bull market is still intact, which I believe it is?
Yeah.
It's just changing. It's changing
Leadership
other
change.
names. Well, no, not necessarily leadership, but the stocks are changing. The makeup of the market is changing. It's still tech. It's still services. It's still financials to be overweight. But if you look at, an AVGO, that's a larger cap name that looks pretty good. Or what do you want to do with a company like MRCY? Anything aerospace right now is absolutely doing very, very well, to be clear.
Yeah.
Mercury Systems looks great. What about KTOS?
Yeah, this is one we talk every once in a while too.
Correct. I mean, again, another one that's performing very well. Or how about even something in the steel space? Tariffs and everything are going up, but Carpenter Steel, CRS, is another name that is going to benefit. New highs, right?
Yeah.
So my point to a lot of people is, where's the problem with the market? You can go buy the new consumer staples, which is Netflix and Spotify, right? And those charts look amazing. Nothing wrong with them. So we're going to get this market higher on the basis of IBM, Netflix, Spotify, Broadcom, to name a few of these things.
What about some beaten down sectors?
Such as?
Can they come back? Like, can we have rotation, beaten down names, a laggard trade come around? And there's a pile. I know Craig's a Momo guy though, so he ain't gonna like any of those sectors.
No, I mean, if I pull up something like a Twilio, right? Again,
sure. Stay in tech.
That's a stock that had been beaten up but has moved higher. To the real beaten up sectors where we've been underweight, like transportation and some of these other things, American Airlines, not working. Some of those kind of things are just not working. I don't think those are coming, rushing back at this point in time. I also don't think that only select parts of healthcare are working, but, healthcare is being held back by, United Healthcare.
The whole sector is. It's true.
Oh, yeah.
Well, drugs too. I mean, the mega cap drug sector has been shambles too. Trump's, trying to bring down drug pricing. There's just all kinds of problems there. But they've been messy for a long time now, besides Eli Lilly.
But United Healthcare is a big part of a lot of healthcare ETFs across the board. And so when you look at this chart and you're like, there's something wrong here, right? Like, it keeps gapping down and people want to keep buying this thing. It's already oversold, but it can't seem to lift. I mean, I won't even go back into history that when I've seen things like this before, but man, when I've seen stocks like this before, some of those companies, weren't per se around. I don't think it's that bad for United Healthcare, but there's absolutely no need to have to buy this. You're better off standing back, waiting for this stock to find its footing. It may not be here. It may be at 200. So there's no need to rush into any of these sort of names. If I was going to buy something in healthcare, ALHC looks a lot more constructive, or ViiV looks a lot better on the charts from our perspective.
What about HIMS? What about HIMS and hers?
Throw it up. Yeah, I mean, that doesn't look bad on the daily chart. It kind of looks like a nice little pullback and a bit of a reversal potentially in the making there. But I don't need to buy Lilly, right? Like, some of these larger cap names are just not performing.
Yeah.
Hey, Craig, before we let you go, could you take a look at Dick's Sporting Goods?
Sure, let's throw that.
Joel wants to buy Dick's. I'm trying to say, it's my last name and I'm not buying Dick's. Craig Johnson buying Dick's.
I could get myself in trouble if I made a comment here, and I'll pause. But what I'll say is, I look at this chart in here, and it's just like it's just kind of consolidating. It doesn't look like it's, shall I say, actionable from a trading perspective for me right now. But put up a chart of DY. Okay, so Dicom, not on a lot of people's radar, but look at this chart.
Yeah.
And your quick story behind this is there's some discussion that the rule for the telecom industry that they have to maintain the existing copper in the ground may get changed under the new administration. That costs these companies, the telecom companies, about $2 billion a year with a B. And if that ruling gets changed that they don't have to maintain that copper in the ground, there's a whole lot more money to go lay out fiber to all the neighborhoods across the country. And if you do that, there's only two players that put that copper or put that fiber in the ground. Dicom is one of them. And look at the valuation argument. I know not everybody is is technical, but if you look at the fundamentals, you're trading at a pretty steep discount compared to its growth rate, and it looks pretty constructive.
Okay, you all
Awesome
know
stuff.
who he is. He's Craig Johnson, managing director over there at Piper Sandler, chief marketing technicians. Always a great interview. Thanks for joining us over the years and your fantastic insight, Craig. We'll be dialing you up again real soon.
All right, thanks guys. Have a great day.
Thanks, Craig.
Okay, I have one more customer service story.
From Five
Okay.
Below.
Nope.
Is it Five Below?
Comcast.
Oh gosh, it'd be
CMCSA.
horrible customer service probably. Is it good or bad? These
Mixed.
cable providers, man, the customer service.
The views and opinions,
Oh.
the views and opinions of Joel Elconin are those of his own, and are not the views and opinions of PreMarket Prep.
Okay, so I got a thing at the end of the month that I've used like too much of my home internet data, which I've never got before. I think it's because we're streaming, a lot more StreamYard. And then
You're
I got
not on
notice yet.
unlimited? First, stop. You're not on unlimited.
I am obviously I'm not on unlimited because they told me, and I'm like,
who's
I'm
not
like,
on unlimited data? We're stock traders. I use
I'm
so much
I
bloody
don't
data.
know. Dennis, I've never got this thing before, right?
Oh,
Ever.
you go.
Yeah.
Go.
And so, all right, so I'm gonna call, right? And it takes forever to get to a person. Like when I call,
And you got to go through automation hell.
Well, then they want you to text, and then you're texting some stupid robot. And so I'm like, okay, I got to call somebody and I'm going to get to a person and then that. So this lady calls me back and I tell her what the problem is and I'm paying X, right? And she said, well, what I could do is you could keep the same service, but could get protection if it goes over for less money on my monthly bill. And I'm like, well, wait a second. And I kept on asking her, like, you're going to give me better service for less money. I'm going to pay less. And she's like, yeah. And she kept on going through it. And I'm like, well, that's a no-brainer,
Yeah.
I don't
Safe
understand.
surfing. We're protection.
I have no idea. I have no way. I have absolutely no idea. So
have you gone through a month yet with that? Or no, this is just recent?
This
so
just
you
happened.
don't know if
Oh
you have
no,
the
what I
protection.
did, my main premise was how much were you charging me for whatever this overage was? Because if I was going to upgrade my service, right? Which I already thought I had unlimited. But then she comes back to me and says, we don't know what it's going to be until next month, but you can avoid this problem by us reducing your bill. I have no idea. I'm totally lost. I know. I have no idea. I mean, I used to do the trick.
They'll
I used
nail
to
you
call
next
like
month
every
and your
3
bill's
months.
twice as what it was. It'll be in the fine print. You should have read the fine print.
I used to call every
value
6
trap.
months.
Jay Rice says this is a value trap.
I'm not touching it. I used to call every 6 months and say I'm switching over, and then they'd give me a discount
and then they'll
for
give
6
you a
months.
deal.
That ran out
I'm
after 3
streaming
years.
everything. I don't need cable anymore. I'm streaming everything. What are you gonna do for me? We'll cut your bill in half right now. They do that actually. We'll cut you right now. No problem. Just stay with us forever and ever. Pay us our $100 a month because we know you can stream for $15. Yeah.
Okay. You know what? We ran way over today. We gotta
do ratings quick. We always do our ratings section. So it's going to be ratings in 30 seconds. Bumble, downgrade to underweight. Pins, upgraded JP Morgan. Those are my 2 ratings of the day. Quick technicals, Joel, BMBL, and then PINS. BMBL, downgraded to underweight at, I didn't write it down who undergraded.
Ladies' choice on this one. It's had support. I don't know why anybody would come to this stock. It's breaking support. Old support, new resistance at the 560 area. That you picked Bumble upgraded. And Hims as the ratings. You're not talking about pins.
That's what I said. Pins. You don't listen to me. Pins is what I said 3 times. But
you said Hims. He said Hims.
Pins. I said pins. There's no Hims upgrade. Pins. Upgrade JP Morgan. Go.
Okay. All right. Pins. I mean, boom, boom. High the move. You might get a look at it today. Keeping an eye on 3364. And right there, that's it. After that, you got a little bit more of a breakout to the upside. So went a little bit over today. We got a lot to cover in the STN room. Al Kleiss, we're going to talk commodities with Al Kleiss from Wedbush Securities. So everyone, have a great day. Back with you tomorrow morning.